Hello, everyone. Just let me know if you can hear me, if we've gone live here. Good evening, good afternoon, and good morning to everyone. Maneko 64 here, home of alternative economics and contrarian views. So today is the 4th of April, 2021. Oh, good, good. I wasn't sure if we've come on yet. That's good. Yeah, we still got about 4 minutes to the beginning. 106 people watching already. We're going to look into derivatives today. I mean, that's the market that I worked in for about 20 years, futures and options. They're kind of derivatives. But I think it's really important that we talk about over-the-counter derivatives. We've got No coming loud and clear. Billy is here, as you can see. He's snoring already. We got Kevin from Ohio. We got Rumpelstiltskin from Japan. We've got Paul Weens from Manitoba. Cupid Stunt. Alan Elias Jones. Catman 734. Lorraine Weymouth from the Jurassic Coast in the UK. Great to have everyone here. Pablo Pina's here. Trying to share my knowledge. IL Prepper, yeah, I am. Prepper Days says he gave a shout out today to me. Thank you. Norman Liu from Torrevieja in Spain. Pocket Lawyer says he loves all the sound money peeps. East Sussex, Shane Sturgis. Ger Oji from Norway. Rolf B from Sverige. Svenska. Sweden. Love Button from New York. So just wanted to show you guys something that I thought was interesting, said by a former basketball player, Charles Barkley. I remember him well when I lived in the States in the 80s. So here's what he said, Charles Barkley.
Shared that news, how painful it was. Yeah, but the one thing I took out of that piece was, man, I think most white people and black people are great people. I really believe that in my heart. But I think our system is set up where our politicians, whether they're Republicans or Democrats, are designed to make us not like each other so they can keep their grasp of money and power. They divide and conquer. I truly believe in my heart most white people and black people are awesome people. But we're so stupid following our politicians, whether they're Republicans or Democrats. And their only job is, hey, let's make these people not like each other. We don't live in their neighborhoods. We all got money. Let's make the whites and blacks not like each other. Let's make rich people and poor people not like each other. Let's scramble the middle class. I truly believe that in my heart. Shared that news, how painful it was.
So I don't know if any of you guys had seen that. I thought that was a good message from Charles Barkley. And yes, we can't let them divide and conquer us. We have to try to not be distracted by politicians or even other people, I would say. So we've got a minute until the officials start. Weekend at Billy's. Yeah, today was quite a nice day here in the UK or in London. I didn't play golf. I'm playing golf tomorrow, but I washed the car because last week we had a day that it was really warm here and we got some kind of wind from North Africa and all the cars got really dirty. They had sand on it. So I needed to wash the car. I did go for a good long walk in the park to exercise, even though I'm playing golf again. I think it's important to stay in shape. So yeah, okay, 9 o'clock. We're gonna start. So yeah, derivatives. Let's look at what over-the-counter derivatives are, because they are the biggest part of the system, over-the-counter derivatives, and they're the derivatives that cause all the problems and have caused all the problems since around the early mid 90s. And before I go into over-the-counter derivatives, I'll talk a little bit about the exchange traded derivatives. They're the ones traded on COMEX or the CME or Eurex, or the Eurex is the big exchange in Europe, and they are transparent. Even though we see a lot of shenanigans, of course, in the gold futures and the silver futures, they're at least they publish data every day. Uh, we see who pretty much is trading in that environment. And these derivatives really started big time, let's say in the more modern era. In the 19th century, I would say it was the agricultural derivatives, and they serve a purpose. These derivatives are used to hedge for crops, for farmers, for people who buy the crops to produce, develop or process food, you know, and people hedge because of the weather, or droughts and natural disasters. Even for miners, for example, they hedge their production uh, of ores and precious metals, I guess you could say. So there's always been a big agricultural derivative space. Basically, a derivative is something that it's like a bet that you put on an underlying commodity. And that's how it used to be up until really the early to mid 80s. So, for example, I'm let's say, a wheat farmer, and the price of wheat, and I don't know too much about the seasonality of wheat, but let's say I'm growing the wheat and the price of wheat is quite high. It's above the cost of me planting the wheat, running the farm. So I want to hedge that because I'm making a profit. So I'll go onto the CBOT and I'll sell the wheat futures. Uh, Basically, I haven't got the wheat ready yet, but hopefully, by the time that the harvest is done and I'm selling the wheat, uh, that price, of course, will have covered all the costs. And if the price drops, I'm protected. So that's what it was used for. But what happened after the gold window was closed by Nixon in 1971, when we went from a monetary system backed by gold and silver, a sound money system, when we went into a fiat currency system, they had to start all these new derivatives. First, they started on foreign exchange trading because the exchange rates started floating against each other, um, which is something that never happened in the sound money system. And someone might say, oh, but that's a free market. But no, money was measured in terms of gold and silver, and you didn't have to hedge foreign exchange, because foreign exchange was just something, it was a ratio that you had, because some of the coins in different countries had different face values and different weights. That was what foreign exchange was about. But with the system collapsing in 71, and then the exchange rates floating in 73, they had to start hedging. So they started out futures on foreign exchange, and then they started out futures on the bond market, on the long bond, on the 30-year bonds, because interest rates got very volatile in the fiat currency system. And those were actually exchange traded derivatives, but they grew out of that. And then in the late 80s, early 90s, they started doing derivatives over the counter. So this is what over the counter derivatives mean. It says here, what is an over the counter derivative, or OTC? Is a financial contract that does not trade on an asset exchange and which can be tailored to each party's needs. A derivative is a security with a price that is dependent upon or derived from one or more underlying assets. Its value is determined by fluctuation in the underlying asset. The most common underlying assets include stocks, bonds, commodities, currencies, interest rates, and market indices. Depending on where derivatives trade, they can be classified as OTC or exchange traded. I can tell you that the majority of the derivatives are OTC here, as you see. And the takeaways: an over-the-counter derivative is a financial contract that is arranged between two counterparties, but with minimal intermediation or regulation. OTC derivatives do not have standardized terms, and they are not listed on an asset exchange. As an example, a forward and a future contract both can represent the same underlying, but the former is OTC while the latter is exchange traded. So I'm going to stop right here. Hopefully, I didn't go on too long. So I will ask people now if you have any questions about derivatives. The other thing I would say about derivatives is that usually when people trade derivatives, they leverage themselves. All the derivatives are set up to you see, when you buy 100 contracts of gold, or you buy one gold future, you only need about 5 or 6% of the underlying value of the contract to control that contract. So it's always leveraged. I'm not sure why they do that. It's part of this fractional reserve system of the banks. And I can tell you that all the major crises in the 20th century, 21st century, have evolved because of leverage. And lately, in the last 25, 30 years, it's because of the derivatives. And I would say it's OTC derivatives that are at the heart of the problem. And I think what we've seen recently with Archegos, that family office is just a hedge fund controlled by very wealthy families. That's all it is. And they're getting very big. And we've had major accidents since since the early 90s. We had Orange County in California. They played with over-the-counter derivatives and they went bust. We had Procter & Gamble in the mid-90s. They bought derivatives, OTC derivatives from Bankers Trust. And that was really, that they had a big loss from that. They didn't understand what they're doing. And the bankers, they exploited that. But what that case did was that Procter & Gamble actually sued Bankers Trust, and it all came out that it was basically a black box, all these derivatives. So I'll show you now how big, at least, the derivatives that we know about, because these OTC derivatives are very opaque, and who trades them? Who is at the heart of these OTC derivatives? Well, it's Wall Street, as you can see here. I got this data from the Office of Controller of the Currency. So this is government data. They do keep track a bit of these derivatives. But as you can see here, JP Morgan, Citigroup, Goldman Sachs, Morgan Stanley, Bank of America, look at how much derivatives they have, nominal amounts. And this is the latest data, end of last year. So this is trillions here. So this is 46 trillion that JP Morgan controls. To give you an idea, the US economy is around 21 trillion. So we've got the top 25 holding companies with derivatives, and that doesn't probably even include some other derivatives that these banks have, I would say is a lot more. And this doesn't include also all the major European banks, but we've got 218 trillion. So that's like 10 times the US economy in derivatives exposure. But the interesting thing here, as you see here, EXCH, that's exchange traded. If you look at that, the total is like 18, just over 18 or 19 trillion. And the rest OTC, over the counter, there you go. That's about 200 trillion. And the other thing they did after the '08 crisis, the Bank for International Settlements, because the Bank for International Settlements under the FSB, Financial Stability Board, and all the regulations, they really regulate all the big to fail banks, even the US banks, the major European banks, the major UK banks. They basically changed the accounting. So I would say if you add up everything that these banks really have, and this is just holding companies, and if you add the European banks, we're talking almost 1,000 trillion, which is a quadrillion. So which is ridiculous, really. That's how risky they are. And with that, I'm gonna show you guys go through this frontline documentary. It's about an hour, but I've picked the important points. It's called The Warning, and it's very interesting because it shows that nothing has been fixed in terms of the derivatives, and especially OTC derivatives. And I think there's an accident waiting to happen, and the next big crisis is going to be related to derivatives and leverage. And I think Archegos and also the repo crisis in 2019 are all to do with these leverage hedge funds, family offices, and the banks are involved because the banks provide these funds and family offices with leverage. For example, let's say a hedge fund has $1 billion with Goldman Sachs, and they say, we want to put this OTC derivative bet on. Goldman Sachs will say, yeah, we'll lend you 50 billion on that billion. You know, they will leverage. And how does Goldman Sachs get its 50 billion? Well, they get it from the Fed, you know, with the easy money, with the zero interest rates. That's the other thing as well. The manipulation of interest rates, keeping interest rates low, accommodative foreign monetary policy. That's what it does to the system. Let's see here. Bob Hunter, where does Jimmy, Cranky, and Boris derive from? I'm not sure I know the answer to that question. Thank you anyway for the super chat, though. So now Archegos battleship was sunk as well. So let's go to, this is a really interesting documentary I found here. I think you guys will like this. I'm gonna play a few. Here we go. So I've got 11 minutes. We'll go straight to 11 minutes. I'm going to put a link to this in the description. If you guys, I recommend you watch the whole thing. But seeing that, you know, the live stream is about an hour, we're just going to look at some important points that I thought would be interesting for us to hear. Let's go here to 11. There we go.
But in Washington, there was one agency that looked at the bull market with some skepticism. Buried deep in the bureaucracy, the Commodities Futures Trading Commission, CFTC.
It was a small fish in an otherwise a pretty big pond. It was always viewed as kind of a sleeping, small, not terribly significant agency.
The agency was authorized to regulate agriculture futures and to oversee arcane, complex financial instruments.
I'm just going to pause here just to let you know, this was in the mid 90s. Okay, so let's keep going.
known as derivatives.
Oh, they're one of these little afterthought agencies that kind of get in the way of the big guys.
The CFTC started getting in the way in 1996 when a new chairperson, Brooksley Born, took over.
My law practice was in the derivatives area. I practiced derivatives law for more than 20 years.
Brooksley Born is a long-time securities lawyer. She has a stellar reputation. She's been around the block. She knows her stuff.
Born was 55, a veteran of the gender wars that had influenced many women of her age group. In Born's case, the struggle had started early. Born went to Stanford in the early 1960s. Most women in her class got married. Brooksley went to law school.
There were very few women in law school at the time. This was during the Vietnam War. And a lot of men in the class saying, what are you doing here? You're taking the place of somebody, a man who could be here and not have to go to war. The way she approached this was, well, I got to show them I can do it.
She did, top of her class. The first female president of the Stanford Law Review.
You would think this would be a great moment of truth.
Yeah, I know this sounds a bit weird. They're going through this gender wars and everything, but I think it's important we listen to this. We're not going to listen to the whole video, but I'll keep going just to give you a background on this Brooksley Born.
Try it for Brooksley Born. Instead, she gets a phone call from one of the deans, and he says, Brooksley, I just want to let you know that the faculty stands ready to step in if you're not able to pull this off. It goes on like that, on and on and on at each step of Brooksley Born's life and career.
In Washington, she became a partner in a prestigious law firm, built an international reputation, formed alliances with other powerful female attorneys, including one who happened to be the wife of Arkansas's governor.
She had developed a very close relationship with Hillary Clinton when Hillary Clinton was a very prominent lawyer in Little Rock, Arkansas.
And then Bill Clinton won the presidency.
Brooksley Born found yourself being invited down.
Just pause here. No, thank you, Super Seamster. We're not in a lockdown anymore. It's starting to open.
And Arkansas during the transition for a meeting with him to discuss possibly being the Attorney General of the United States.
She's very self-effacing. You know, she's flattered, but she's going to see if it happens.
Week 7 of the Clinton transition. This is Henry Mitchell.
So I'm just going to forward here. She actually, I'm going to stop here. Yeah, she was actually considered for Attorney General under the Clinton administration, but she didn't get it. And later she became the president, commissioner, of the CFTC. So let's go to 22 minutes here. There's another important part of the video.
Know how big a market it is, and know who owns them and who owes who money.
This is the important part here about the
banks and hedge funds all over the world.
And that's what frightened Born more than anything. Trillions of dollars, and the biggest banks in the country operating in secret. If something went terribly wrong, the high-stakes derivatives market could take down the entire financial system.
And that's what everybody's worried about. You have one big institution that fails. It can't pay its obligations. It forces somebody else into a dangerous territory who can't pay their obligations. Pretty soon, it's a falling domino effect through the economy.
As the market grew and morphed, Born felt her agency would have to get involved. But that would mean confronting Greenspan, Rubin, and Summers.
She used to say she would lay awake at night, turning in her bed, because she could see coming down the road, the crises kept building and building.
Alan Greenspan told Congress today the U.S. economy is the best
So here we go. I'm going to stop here now. So basically what happened, Brooksley Born of the CFTC tried to warn the public, try to warn Congress, try to warn the regulators, the U.S. Treasury, the Federal Reserve about over-the-counter derivatives. Why? Well, because over-the-counter derivatives are basically not transparent. They're run by the big Wall Street banks. So basically what Alan Greenspan at the time, Fed chairman, Robert Rubin, ex-Goldman Sachs at the time, Secretary of the Treasury, and what's his name, Larry Summer was the assistant Treasury Secretary. What they did, they did a hit campaign on Brooksley Born because they were there to serve the banks. They call it really the a big financial lobby, but the banks basically bought and paid the Congress, so they didn't want to listen to Brooksley Born. She warned the country, she warned Congress that she was concerned about the money of the public, that this market, this opaque market that controls trillions of dollars, if not hundreds of trillions, really, I would say now, would cause a big crisis. And she was right, because we saw, a few months after they put her down, I think that was in 1998, they fought her off in Congress. You had the failure of long-term capital management in late 1998, LTCM, and it was because of OTC derivatives. And in that crisis, it almost brought the whole system down. The Federal Reserve had to help the big Wall Street banks bail out this LTCM. And LTCM was seen as, they were like the masters of the universe. They had Nobel Prize winners on that fund. They could do no wrong, but then something went wrong. The Russian market collapsed as well, the Russian default in 1998. And LTCM basically was going to collapse. So the Fed forced the Wall Street banks to bail out this fund. I think it was $3.2 billion. And but still, they said it was an anomaly, and they kept going. And I would say that nowadays, yeah, Jim Rickards was the lawyer for that LTCM. And I've heard, I give him credit though, Jim Rickards does come out and say that we need to, if not regulate, he says that all these OTC derivatives or even financial derivatives need to be banned. And I think under a sound money system, we wouldn't have as many or as much need for financial derivatives, derivatives on interest rates, on currencies, on bonds. The reason we need that now is because the system is so inflated that the only way to manipulate the system is through the derivatives. Yes, and it's the title of this live stream is Wall Street, thrives by derivatives, lives by derivatives, but will die by derivatives, or the financial system. And what I mean by that is that it can be really good and it can really help things when the market goes the right way, because under a derivatives system, people leverage, so people make a lot of money. But when it turns and people don't see it coming, like LTCM, it can be disastrous. And I think the next crisis I can say 100% it will be a derivatives crisis. And I think Archegos is just the tip of the iceberg. And we're going to see there's a lot of mines out there that are going to burst, explode. And it could happen anytime. And it will bring the whole of the banking system down. And why is that? Well, because the banks They make billions from these derivatives. And that's why Robert Rubin, Alan Greenspan, and Larry Summers didn't want them regulated, because the other thing that these derivatives do, the derivatives market and how can I say, they keep everything off the balance sheet. A lot of these things are done offshore in tax havens. So yes, it's a disaster. So I'm going to stop here for a while and see, just, we're doing Q&A, so feel free to ask questions and I'll try to answer them as best as possible. Susan Faust, Suez Canal blockage was no accident. Domino effect, yes, we'll have a domino effect with derivatives. Let's have a look here. I've got some more stuff here. Oh yeah, this is the other thing as well that many of you probably don't know. Some of you know about this, but I'll show you here. Back in December 2014, this is from this website here, Mother Jones. Citigroup wrote the Wall Street giveaway the House just approved. The bill, drafted almost entirely by Citigroup, would allow banks to do more high-risk trading with taxpayer-backed money. So this was under Obama. Citigroup was able to put in this legislation, the fact that the FDIC now, they're on the hook for all these derivatives. And this is quite amazing. So the bankers, it doesn't matter who's in power, they will always be there. And Citigroup, of course, benefited a lot from derivatives in the early 2000s. And what else happened there? Robert Rubin, when he left the Treasury, he was employed by Citigroup in the early 2000s as a payback, not only for keeping OTC derivatives not regulated, but also for repealing the Glass-Steagall Act. What did Glass-Steagall do in 1933? Well, it said that commercial banks could not be involved in investment banking or derivatives. So with the repeal of the Glass-Steagall in 1999, banks like Citigroup, JP Morgan, and other commercial banks, they could get involved in derivatives and put normal bank depositors' money at risk. And that was payback that Rubin got. So he got paid hundreds of millions by Citigroup to do nothing really there. He had an office, he had a title, and then Citigroup had to be bailed out by the taxpayer, I think over 100 billion, and he still got paid, which is really outrageous. I think. I mean, Rubin, Greenspan, and Larry Summers have a lot to answer for all the troubles that we still have in the financial system, because these derivatives are still out there. It's not regulated, the OTC derivatives. And as you saw, it's the huge percentage of derivatives are OTC, and they're not transparent or regulated. Bob Hunter, thank you from your super chat again. Chris Conman says, happy Easter. When the dollar finally collapses and hyperinflation ensues, what is the best way to get rid of it? Well, the best thing to do really is to try to get rid of it before it happens, to have very little paper dollar, because if you still have a lot when it starts and it collapses, it will be too late, Chris. That's why I keep telling people that they need to try to keep as little as possible in the system, in the paper dollar. Yes, try to deal as little as possible with these banks. They're not there for your interest. Lord Humongous says $1 million for garage in Toronto. Yeah, the prices in Canada are crazy. I've seen that. That's been happening for years, and especially now. Ruben Greenspan and Summers, all from the, well, you say that, but they're, I try not to get into this religion and ethnic group discussion. And that's probably why I'm still here on YouTube. I try to look at what they do, because it wasn't only those three guys. There was the chairman of the SEC, Levitt. He also bought into this, even though in this warning that I'm going to put a link to, he kind of changed his mind now, and he says Brooksley Born was right. So, and so I'm not sure. I try not to. I just try to look at what people do, because people of all religious groups, all ethnic groups, all genders, they all do good and bad things. So I try not to get into that, Rolf Steiner. So there you go. Lisi says, Lisi R, bank runs are coming. Yeah, they could come. The other thing that they could do, if the banks get in trouble, they're just going to print more. The central banks will make sure that, but that just means that the currency is going to become worthless. It's going to be like confetti, which is already what we're getting. So let's see what else. So we got, I've got a few more things here. Let's see. 52. Orthodoxus Carriers, thank you for your super chat. Let's play a bit more here. 52. Okay, here we go. Let me share this.
As for Brooksley Born, without new regulations, she's offering another warning.
I think we will have continuing danger from these markets, and that we will have repeats of the financial crisis. May differ in details, but there will be significant financial downturns and disasters attributed to this regulatory gap over and over until we learn from experience.
So there you go. It's very clear. It hasn't been fixed. And why hasn't it been fixed? Well, because Wall Street controls Congress. Congress, the other thing that derivatives do, they keep this credit fueled economy going. A lot of times the voters, they don't know what's going on underneath the hood, or the bonnet, as they call it in England. The financial system. They don't realize it's a house of cards. So everyone enjoys it. But then when something like 08 happens, no one knows, no one sees it coming, even though there are people like Brooksley Born who saw it coming, and she still sees it coming, and they haven't done anything about it. Thank you, Bobcat. Says another informative live stream. Gold shares in safety deposit box. I mean, if you can get your broker to send you the stock certificates, I'm not sure if you have to keep it in a safety deposit box. I would say, I have mining stocks, but it's a small percentage of what I have. I think the financial system could get in trouble, and it could bring down a lot of brokerage houses, and your stock holdings could be in jeopardy. But I have an amount that I would be willing to lose, that I would feel comfortable losing. But I also think we can't be too melodramatic and expect the worst, because the system could have a lot of trouble, but the markets could still keep going. And during the Great Depression, the miners did very well, even though the whole stock market collapsed. The whole system came to its knees. There's a lot of bankruptcies, a lot of bank collapses. People who held miners did well. So I'm not trying to tell people to be completely outside the system, even though some people would prefer that. I know that Lynette Zhang doesn't like to be in the paper game. She just likes physical. I'm a little more flexible, even though I would say I don't really put a big percentage of what I have in the system. Sorry. Not Joe King says, thanks for your consistent efforts. What happens when people holding paper all want delivery at the same time, both gold and silver? What happens to all the offshore money too? Well, they won't get it. They will lose it. That's what happens because the system is so leveraged. The bankers, that's always been the Achilles heel of the bankers. They lend more, and they lend more than they have in deposit. And they'll lend your money many times over. They'll sell you gold that they don't have. And when things get rocky or volatile and there's a crisis, you can't have your money, and that's why you need to be. That's why I think it's, when I look back at my father, my grandfather on my mother's side, I always thought they were weird because they never liked the stock market. They kept their savings, they put it into real things, property, not leveraged, of course, but they always told me, oh, don't trust the banks. And I always thought that was extreme, but they were right. And I think that's still the way forward. You can't really trust them. And if you are going to deal with them in their system, in their financial system, you have to be very careful and you have to be aware of all the shenanigans. Risser, okay. Let's see. Henry Rua, isn't Harry Dent short-term, right? Short-term and Dahlia medium long-term. Harry Dent, I'm not sure. I think Harry Dent, he doesn't realize that the dollar is not what it used to be during the Great Depression. During the Great Depression, the dollar was gold and silver. Nowadays, it's a debt instrument that has been created out of thin air. There's nothing behind the dollar. There you go. Bob Hunter, have you heard of Target 2 in relation to the European Central Bank and Greek of the book department? Yeah, Target 2 is all the money that I think each individual central bank within the Eurozone is lending out to the bankrupt countries. I think the biggest sucker, so to speak, in this Target 2 is the Bundesbank, unfortunately, because the Germans have lent a lot of money to keep the system going. So yeah, Europe is also in deep trouble. All the fiat currencies are in trouble. It's not just the euro, it's the dollar, it's the pound, it's the yen. And I would say maybe the Chinese, they would be in trouble too, but they're in a better position, the Chinese. They have an economy, at least, they still have an economy that produces things, and they are also the biggest creditor nation in the world. And like the Russians, they've been buying a lot of gold and silver. Tim Goodson, thank you for your super chat. Is the Fed going to keep printing That's like asking, is the Pope Catholic? I would say about that. Yeah, of course, they're going to keep printing. The Fed, really, they try to raise rates a little bit and unwind things in from 2015 to 2018, but that ended in disaster. They had to reverse everything. Under the current system, I don't see the Fed ever, going tight or raising rates substantially or unwinding their balance sheet. They have no choice. As Mises said, once you start down the inflationary route, you can't stop it. And we're too far gone into the inflation. And by inflation, I mean, printing money. You look at M1 in the last 13 months, it's gone up over 300% in the US. M2 is gone up over 25%. It's not going to end well. And they'll have to keep printing. Lord Humongous, the charts show a big update for gold and silver on Monday. Yeah, I mean, I made a video, was it yesterday, I think, about, or is it Friday? I think it was on Friday, because Friday was a holiday. I made a video about the technical for gold and silver. They look pretty good, even though you never know. But I think we're near a bottom, I would say, in gold and silver, at least in the paper market. Let's see if there's anything else here that I wanted to show you. Oh yeah, so with this Archegos, fund that went bust, there's a lot of talk now about these family offices. You see, they can do what they want. Archegos and the 6 trillion world of family office. So this is a new big thing. It's not just hedge funds. It's these family offices. And Bill Hwang, I think he's originally from Korea, but his father moved to the US when he was young. And he used to work for a Tiger Fund, which was Julian Robertson, a big hedge fund. But yeah, so it says here, the implosion of Bill Hwang's investment firm has focused attention on a pool of capital almost twice the size of hedge funds. So yeah, this is a big problem. These family offices are not regulated. They deal through London, the City of London, Wall Street. They're set up offshore, even though, let's say, these funds are run from places like New York or London or Zurich or Geneva. All the assets are kept offshore, and that's why they like to do the OTC derivatives, because the OTC derivatives keeps everything off balance sheet. It's a huge, and I think even Brooksley Born must be, really worried right now, because, it's, they say they control 6 trillion, but with that 6 trillion, they could leverage that into 600 trillion, and the banks on Wall Street and the City of London, they'll oblige. Why would they oblige? Well, because it's more fees for them, but there's a big danger, and I think it's going to blow up. It's going to blow up soon, in my opinion. This is just a start, I think. So, someone, shrinkflation. Yeah, Jolyn Pinto's shrinkflation. Yeah, I went for my walk today around the park a couple of times, and I was really hungry. I stopped in a little shop and I bought a bag of chocolates, Minstrels, and they're like, I'm not sure they have it in the States, but they're like M&Ms, I would say, but they're just chocolate. And I remember the bag of Minstrels used to be fairly big, and there used to be a lot of pieces of Minstrels. but now you can count them. There wasn't much. That's shrinkflation. What we see a lot with shrinkflation as well is they're keeping the same package, but they're just putting a lot less in there. A lot of times they will cut the package and keep the same price. Chris Conman, thank you for your super chat. If the Treasury ever issues a new currency, how will gold and silver be priced in it? It will be the same will it be the same because of all the inflation? I mean, the market will price it, especially if they don't back it by gold and silver. It depends, what they do with the old debt. If they're able to wipe out all the debt, but that, wiping out all the debt that backs because the debt now is the currency. So if they wipe that out, they're going to wipe out a lot of people. I'm not sure. I think the better thing to say is how much, what would be the price of the currency in gold, is to look at it the other way around. I think that's how we have to look at it. What would the new dollar be in terms of gold? That's what you need to think about, because gold and silver are at the center of the monetary universe, and everything, the price is just a ratio. And unfortunately, we've been, conditioned to think of the paper dollar as being money and everything been priced in it. We should look at it the other way. I don't think we should be too hung up on these fiat currencies and what their price in gold will be. We should just know how much a gram of gold will get in terms of, bread or, meat or whatever commodity or service, or an ounce of silver. That's what we should be worried about, not these currencies out of thin air. Bob Hunter, thank you again. My belt is 28 inches and my political representative has a 60-inch waist. We can equally tie our belts. 28, that's pretty good, Bob. I'm I think 32. Huh. Yeah, that's right, Rolf Steiner. You wipe out the debt, you wipe out Social Security, all the government programs. You wipe out all the pensions. It's a huge problem, and that's why I try to not depend on government pensions and stuff, even though I'm supposed to get one when I turn 67. I'm not counting on it. That's why I try to stay outside the system and keep stacking. That's the only way to maybe survive something like that, where they wipe out all the debt. That would be, they can wipe it out as well by letting the price of gold and silver go to the moon. That's another way of wiping out the debt, and I think that's what they're going to do. David Veach, Frank Justra. Yeah, I mean, Frank Justra is highly connected with the political establishment, even though he's like a gold guy. Yeah, I'm not too sure. A lot of the things he says make sense in terms of the system and gold. But yes, I'm aware that he's very well connected to people that I don't like personally either. What will happen to Basel III? Well, Basel III will probably evolve into Basel IV after the next crisis. It's just a regulatory framework. That's what Basel III is. Cupid Stunt, do you know what's going on with Library Coin? It's fluctuating between 35 and 27. Yeah, I mean, I earn Library Coin. Don't have that many right now. I saw it went to almost like 44 cents. It used to trade around 20 or even below it. I don't know what's going on. The altcoins seem to be moving quite a bit. I saw that Steam, which was trading around 20 cents up until 6 months ago, is now over $1. So these altcoins can be very volatile. I don't know what's going on. More potential buyers than sellers, I would say, of Library Coin. Not Joe King. Any plans for summer here in the UK? What do you think it will look like if they close the pubs again? Well, from what I try not to listen too much to the mainstream or read too much of the mainstream, but from what I'm seeing is that they're trying to gradually open up the economy, and hopefully they will. I saw that the chief medical officer, Chris Whitty, said the other day that, after June, and that's a big if though, after June, that they would consider this CV-19 as just a normal flu, and that things would go back to normal. So hopefully that will happen. But in this crisis environment, 3 months is a long time. A lot could change. I've seen as well that they're going to allow people here in the UK from May 17th. We can start traveling, going. One country you can go to again is the US, which would be nice. But yeah, it's not going to be the same. But I would say that the economies of the world, and that includes the US, the UK, they're a lot worse than people, the powers that be, the bankers, Wall Street, City of London. They're a lot worse than they tell us, that they're good. They're a lot worse than we're told, in my opinion. I saw a video of Jeremiah Babe today. He was in LA. LA is like gone. There's nothing there. And I think there's trouble brewing as well for all the forbearance, not only in the US. A lot of people they've been let off from paying their mortgages and their debts, but that will have to stop. And also the furlough scheme here is keeping a lot of the statistics looking a lot better, but they can't keep paying people not to go to work forever. They've already extended it from October. It was supposed to end in October last year to October this year. At a certain point, things are going to have to stop, and people are going to realize that the emperor has no clothes, and it's going to be really bad, in my opinion. Yeah, Gianfranco Bergagna, derivatives is just a casino. You're right. In the beginning of the live stream, I talked about how agricultural derivatives do serve a purpose for farmers, for producers, but the financial derivatives, they've mushroomed because of the fiat currency system that we're under. And I think they serve no real social purpose. They don't create any economic advantage for the public. They just suck. The other thing that derivatives have done, they've sucked the wealth out of the general public. And that's why there's a lot of populism in the world, a lot of division, because they're huge bets. So basically, we the public, the taxpayer, are basically backstopping a casino for Wall Street. And the worst thing is that when they lose, we cover them. when they win, they keep everything, and they don't even pay tax on it because it's all offshore. And that's why I think I agree with Jim Rickards when he says financial derivatives have to be banned. And I am a free market guy, but if you watch this warning documentary, which I'm going to put a link to it below in the description, yeah, it's more than just free markets. Alan Greenspan was against punishing fraud, which is ridiculous. I'm against that. I'm a free market guy, but when there's fraud in the market, it has to be investigated and punished. You can't let it go on, and that's what Greenspan wanted. If you watch that. Rochelle says, happy Easter, Mario. Got to cantor in church today and heralded the congregation to join the Alleluia responses. Didn't know that singing as a member of the congregation isn't allowed. Oops. Yeah, I saw a few videos of one here in the UK, a Polish church. The police went in there and wanted to stop, the congregation. One in Canada as well. It's really bad. Anyway, Girl OG, thank you for your super chat. Have the repo madness begun again? If so, I think that is the last straw before everything collapses. Yeah, it's, the problem with the repo market now, some people think, is that rates are going to go negative instead of going to 10%. Sorry. The repo market basically is, is like a pawn shop for Wall Street, the family offices, the hedge funds. They go there, and they take their assets that are supposed to be risk-free, and they lend it out for cash, and they take that cash and they leverage it to buy derivatives. So they're all, the repo, the derivatives, they're all interconnected. It's a huge, I guess the repo market is when you go to the casino and you go and you get your chips. I'm not a gambling man. I've been to a casino, I think, once. When I lived in Switzerland many years ago, I went with a couple of friends. We went to a casino in France, actually near Geneva, and we played the roulette. We got there. The first thing we did is play the roulette, and we won 200 francs. And I said to my friends, why don't we just go have a nice dinner now? And they agreed. And so I don't know much about casinos, but I know that when you get to a casino, you take your cash and they give you the chips. So basically the repo market is like when you go, you take your treasuries and they give you chips to play in the casino. That's what the repo market is. Bob Hunter, thank you for your super chat. Sorry. Oh, he's got a message here. A lot of Adolfs. I agree, Bob Hunter. Sturgeon, Johnson, Macron, Trudeau, Lagarde, Klaus Schwab, Gates, Sanchez, Morrison. Yeah, they're all Adolfs now. It's like, I think it was Nixon who said we're all Keynesians now. So yes, they're all Adolfs now, unfortunately. It's all right, Bob Hunter. I don't mind. I personally think all these guys are just puppets. They're not really in charge. Difficult to say who's really in charge behind the scenes. But yeah, they're just like the puppet masters are not around, of course. Mike Gardner, What's the best or safest country for an American to move to? I might add, I only speak English. Too old to learn another language. Um, I don't know what the best country for I mean, why just an American? What's the best country for anyone to move to? I don't know. Uh, I think a lot of Americans go to Costa Rica, but I'm not here to advise people where to go. But I think I don't think there's anywhere safe these days. So I'd rather be in the place that I know than somewhere that I don't know, even though that place might be a little more advantageous or free. I think, yeah, better the devil you know, so to speak. But yeah. David Veach thinks the Rothschilds are linked to the Perth Mint fiasco. I think it's more related to Comex. Yeah, the Perth Mint troubles. They're trying to, because they seem to have the silver, but they're not providing the silver to the domestic market. I think they're sending all their silver to the US for Comex. That's what's going on. Have you got any more roundtables lined up, Chris Marcus, Lynette? Well, I'm going to interview Lynette in May. I've got that set up. Chris Marcus, I haven't been in touch with him lately. And I think I'm going to be speaking with John Adams from Australia on Wednesday morning. Okay, I'll take a few more questions before we call it a day. Cupid Stunt, what do you think about the ECB? A lot of people saying it's very wobbly at the moment. Yeah, I think the problem with the EU, Eurozone, is that their economy, they're locking everything down. They haven't managed this crisis as well, if you want to call it that. And yeah, they have a problem that there's a lot of bad loans and they're going to have to keep printing. But I think we're all in the same boat. It's just they're just in a worse scenario, I think, the ECB. Thank you, Norman Burton, for your super chat. Lily Robin, the hour flew by. Yeah, it does. It does. Rochelle Fernandez, I enjoyed your video on new SDR layer by IMF. It inspired me to look up the monk I mentioned and uploaded what he said about IMF, International Manure Fund, or International Monetary. Yeah, it's international mafia as well, I would say. Gianfranco says, stop drinking with that noise. Well, I have to keep my throat, because when you speak for an hour, your throat goes dry. I'm sorry if I'm making a sound, but I have to drink some water. Yeah, International Mafia Fund. That's right, Lord Humongous. One of the top people trained at NM Rothschild is part of the Perth Mint. Yeah, the other thing about the Perth Mint, up until 1968, it was owned by the Rothschilds because the Rothschilds also owned the Royal Mint in the UK up until 1968. So yeah, the Rothschilds minted all the coins for the British Empire until 1968. Now the Perth Mint is owned by the state of Western Australia, but it's run by a private corporation. All right. Thank you, everyone. I wish you all a great rest of the weekend, or a great start to the week if you're in Japan, like Rumpelstiltskin. And thank you for showing up Also, if you're new to the channel and you enjoy the live stream, think about subscribing to my channel, and I'll talk to you guys tomorrow. Take care.